Great to be here.
Hey, what's up? This is an interesting format, by the way, because we talk all the time, and it's like now it's like the structured
I know.
thing.
Our one-on-one time is with all of you, so it's a great way to spend an afternoon. So I'm Alison. Great to see everyone. We'll around this afternoon, so hopefully we can spend more one-on-one time together. I'll have Leif.
Hey, I'm Leif, co-CEO of Public.com, investing app. We'll talk more about it.
Okay, great. Leif and I could be up here for 20 hours, but we have like 20 minutes, maybe a little bit more. So I think we'll start on the founding journey of Public. And we were early investors with Leif and his co-founder, Yannick, who unfortunately isn't with us. The two of them have really built this business from scratch. But I think it's always, for everyone that's building a company right now or inspired to build one, I think the founding journey and the initial story is always, so enlightening to hear. So why don't you just start with the early seed, no pun intended, on getting Public off the ground and kind of the initial principles that are still defining for the business today.
Cool. So first off, we're still a very young company, right? So we are now 3.5 years in market. We launched in September of 2019. And the way we kind of looked at this was there were basically these two barriers in the market. One was this like structural barrier of the median savings balance in the US was like a little bit over $2,000, and at the time things like Amazon was like a $2,000 stock, and so it was a structural barrier of like being able to actively invest in the markets. And then there was this like psychological barrier of just like feeling that it's not for you. And so on the one side, we basically were the first to do real-time fractional investing in the stocks to basically make it possible to buy any stock with any amount of money. And by that, really just like breaking that structural barrier. And then on the, call it like emotional side, was really the sense where we recognized that active investing or stock trading often was like this, had this like very kind of bro-y culture around it. And so it was your day trader, and it was your, stock twits, and it was your, Kramer on CNBC, et cetera, et cetera. And that culture didn't really lend itself to like a true like mass consumer product. And so what we did very early on was, can we try to basically build a perception and a brand around the markets that just make more people welcome, so to say. And so we had like a social layer around it where you could follow other people, you could see who else is investing. And where we started was really trying to bring people in the markets that you usually wouldn't expect to be there. And so our first acquisition partnerships were with things like Girl Boss and with things like Working Not Working, which is like a creative community and so on, to really try to make that first base of the community something that was not your typical, trader bro, so to say. And that's really where it started. And so we want to talk about this notion of you become who you acquire. And so being very intentional, especially in your early days, around who you acquire, because that will kind of shape the culture of the community that you're building and the types of users that you're acquiring, who will give you your first feedback, whose data you will be tracking to decide to make decisions on what to do next, et cetera, et cetera. And so being very mindful on like who you're trying to be for very early on, I think was something which is very focused on.
And then putting community at the core of what you were doing, even in the really early days, right? Community was a core part of what?
Yeah,
person by person, user by user, right? That was always something. And I think for us as investors, when we look at, now of course people do talk about community, but years ago that was less, people thought about it after the fact, right? At scale, then you think about community. But you guys were, that was like an early principle of Public.
Yeah, and I think there was just a sense of, back to the psychological barrier, if you think it's not for you because you're a finance person, you might be, just a little bit scared about it, et cetera, that seeing people like yourself actively doing it was one of the main things that really just like breaks that barrier, right? And that was one of the core pieces, right? Also in the sense of, as you come into the product for the first time, also trying to figure out who you are and trying to place you like in the graph at a certain, place, so to say that, so that you will actively find people who are closer to you and who are, for example, talk about the companies that you're trying to invest in and so on, was like an important, part of it to really kind of break that down.
And then from those early days, leading up to, right, into the pandemic, and then now for the last couple of years are some of the most volatile, exciting, scary, challenging moments to be a retail investor, or at least feel like you're an informed, skilled retail investor. So let's talk more about kind of where you were, product roadmap, community growth, going into the pandemic, and then, you know, in the 18 months that followed, because that was just, you know, a historic time for every business, in any product in the world.
Yeah, I mean, in our space, there were obviously multiple market events always happening, and if you're in the space that we're in, market events is like, organic acquisition is driven by market events. Whenever market events are happening, it can be small, it can be an IPO, it can be a stock split even, or it can be large events like, you know, pandemic or, you know, other things. But like if I now look at the years back, I can really look at it as like, we launched in September of 19, then I think we announced the Series B and in like the first week of March of 2020, and then I think like few days later is basically when everything shut down. The circuit breaker on the New York Stock Exchange hit, I think, twice within a day, which hasn't happened since, I don't know, the 20s or something. And it was just nuts, right? And then at that moment in time, I also remember like the emails going back and forth of basically just, you know, sure for all other companies as well. So it's like, okay, so COVID in public, like, what are you going to do now? You know, we just raised the money. We're like, okay, like, you know, hiring freeze. Let's make sure we're not spending this money. Let's see what we do with it.
What are you going to do? Like, you're at the nexus of, you know, investing in consumer behavior, which everything was up in the air. Totally up in the air.
Exactly. And then at that moment in time, what really started happening is that we just saw the new cohorts coming in, literally week after week. And people were basically just like, you know, they were buying the dip, so to say, of, you know, the drop that happened throughout COVID. They, you know, found like the only sports arena that was still open, which was the stock market, because sports were off, and so on. And that really started, I think, like that first kind of, you know, frenzy, for lack of better wording, where
and a pop culture.
Yeah, and like a little pop cultural event, exactly.
Yeah.
Well, like 2020 was obviously like your COVID stocks. And then going into 2021, it was like, I remember this, we had this little like meeting for the team at the end of 2020 where we sit together and it was like, okay, 2020 was crazy, you know, 2020 was not going to be like this, so like, you know, let's calm down, and then GameStop happened in January, right? And that was like the second kind of major market event. And for us, obviously, that was, you know, we were a super young company still, right? We were like less than a year and a half old, you know, by that time. And, but that really was like one of the catalysts for us to, you know, to just get way more awareness and so on. I think we had like 2 billion media impressions within a week or something throughout that time. And it was just generally like a crazy time. Like I remember this call at like, we have an office in Copenhagen as well, in Germany, by the way. It's where the beautiful accent comes from, FYI. And it was like, I think it was like 6 a.m. in the morning. We got a call from our CTO. It was like, and it was January 28th, which was Thursday. And it was like, guys, so yesterday was our best day ever, but like 2x. It's 6 a.m. and we've cracked that already. And was like, whoa, okay, let's strap in. And then obviously certain other events happened with, you know, when competitors stumble and so on throughout that time as well. And so that day was just crazy. Then that Friday afterwards was crazy, it was nuts as well. I think at some point we took in like 4 signups a second. Also on Twilio was throttling us. Yes. We had to like get on the invoice plan as quickly as possible because the credit card was bouncing and stuff. And then we basically had 2 days of breather. And that Saturday, we basically made then the decision to go off payment for order flow, which was something we always want to do. We'll talk about more in a second. Yeah. Introduce this like tipping concept, which is, you know, basically the ability to have the choice to pay for order execution. And then on that Sunday, we took a bunch of investor meetings. And then the whole Sunday was investor meetings. And then we raised another one of that. And we closed, I think, like 10 days later. So.
Yeah. So I think something, and we'll talk about some of the innovations around Publix. I think it's so informative for everyone in this room, but I think understanding for your business, like what are the like hyper growth vectors, right? Some you can control, many you can't control, but I think thinking through that. But then why don't you talk about the disruptive, the tipping and the payment for order flow? Because I give Leif and Yannick tons of credit for always like understanding where to push and kind of where to disrupt certain things. When people tell you you're crazy, I mean, this is also being an exceptional entrepreneur, because most of the time people will tell you you're crazy. But I think, why don't you talk through some of those decisions, because you guys were on the very far side of where things have been for 100 years, I mean, for decades, right? And being willing to change accepted norms and push really hard against the status quo.
So I think it's two things. So on the one side, we were an early enough company that we had the chance to still develop our business model. And if you start a brokerage, PFOF just comes out of the box, basically. And you will just not question it. You'll be like, this is just one of the revenue streams, it's what everyone does, and so you just go. But it has this conflict of interest where you want people to trade a lot. Your actual customer is, a market maker around the block. It's not the actual user that's using the app, et cetera, et cetera. So it creates these like weird dynamics for the business. And so we always kind of talked about that, generally speaking, but then we were also just like early enough that we had the chance to still develop a different model, right? And with that also develop something where you're way less reliant on transactional revenue streams, which can be highly volatile, which are not rewarded by the public markets, as you're seeing now with some other companies as well, et cetera. And so that was one. The other piece is, internally, we always have this concept of build a fan base, not a user base. And so what that basically means is that like a user will use your product for the utility it provides, which also means it's very easy to compete against that, right? So if someone makes it freer than free, or it's a new cool kid around the block, or just does the same features but a little bit different, right? It's like these are the things like easy to compete against, and so that retention is something that can start to crack pretty quickly. And then where versus a fan base are people that rally behind your company, and to make someone rally behind your company, it's not just purely going to come from the utility you provide, it's going to come from the values that you find alignment with these people. And what the payment for order flow thing was, honestly, that was just one of those executions, was just a sense of it aligned values with a lot of our users. It made our incentives very clear, and there was something that just many people like to support, so to say. And so that was one of the executions for us to basically create that value alignment with the user, which creates what I would call emotional retention, where you are with the company and the product, not just for the utility it provides, but because of the emotional connection that you have to that product and the company. And so, think of it as this way of like, if I, meet you in the bar now, and you have, a certain other trading app on your phone, you'll be like, I use this, like my reaction shouldn't be like, I use public, it's a little cleaner, it's a little nicer, I like this thing. But my reaction should be like, whoa, WTF, why are you using that? You should use it, like, you should use public because, And these bullet points, right, those are the proof points that you give your customers to rally on your behalf. And I think that's what creates like the emotional retention, that what creates, word of mouth, et cetera, so all the good stuff around it. And so, that pivot move was one of the executions to kind of try to create more of that emotional retention.
Which is world class. The engagement and retention is world class and has stayed there. I mean, I think that the idea of the values alignment, again, I think now people do talk about, but was not something that people were building for many years ago. Okay, so you make it through GameStop. The fan base, right, accelerates dramatically. Then a little thing called crypto becomes something that's now a new pop culture theme. You guys launched crypto October 2021. Let's talk about, that experience, what you guys were really looking to deliver in terms of that value alignment, and then how did that cohort mature on the platform?
Yeah. We were obviously very late in launching crypto, and so, I think fully rolled out was like November 21 or something. It was super late for crypto. And, but where we looked at crypto was the sense of that people enter the markets through different asset classes. And so there's a lot of folks who start their investing journey by investing in crypto, for example. And even though they start there, it doesn't mean that they're going to end there. And then it's a little bit our responsibility to make sure that people end up diversifying into other assets, build up a portfolio, you know, learn certain investing principles, and so on. And so crypto was really, you know, one of the pieces to ensure that that can happen, you know, within one app. And then later on, we obviously acquired Otis. You're one of the first to do fractional investing into, you know, collectibles, so like fractional art, rare sneakers, and things like that. And that was a similar thing, right? So you will likely find people who understand the value of a rare sneaker more than they understand the value of Amazon stock, for example.
Right. Feel more comfortable with that.
And feel more comfortable with that and so on. And so their journey might start there, right? And so these are basically just like different doors on how to enter the markets. And, you know, then from there, you know, it might end up being X% of your portfolio, but yeah.
And for people starting out, how do you think about that product journey, right? Is it just kind of nodes off of, you know, the one base? Do you think about it as different user segmentations, starting at different places and then ending up, right, with a broad retail portfolio? How have you thought about that?
Yeah, so we're doing a lot of thinking on that right now, because we just launched a ton of products, and so now we're in this, now we're in this mode where like, oh, we launched so many new products, we have to figure out the whole, you know, new user experience.
Right.
Needs to basically change and adapt to that. Yeah. And that's the thing, people have different entry points, and that's completely okay. And so from an onboarding perspective, you got to be able to kind of, you know, create your own path, and then kind of go from there. But yeah, I think one of the core ways of how we think about it is there's products and there's levers. And so products being the things that we make money on, and the things that we obviously want people to adopt in order to build a portfolio. It could be asset classes, it could be instruments, it could be things like recurring investing and so on. And then there is levers, who are basically things that that help drive adoption of the different products. And that can be, you know, a different account type, that can be, you know, things like, you know, referral is a lever, right? And so on. And so that's kind of how we kind of view it, everything we build. It's like either product or lever, and then and that kind of, you know, creates the experience, so to say.
And then since kind of through 2022, obviously there's been a significant correction. Finding things that are green every morning when you open your investing apps is harder than it once was. But now that's created a new, right, set of demands and interests, right, from all investors to find returns, be more measured, do more research, be more intentional in some ways than we were through the pandemic. How are you seeing that show up in the public experience and in the fan base?
So you could really, like, back to every economic cycle, every kind of, you know, a year has its own asset class, right? So 2020 was the COVID stocks, then you had your meme stocks and crypto rallies in 2021. And now you could make the argument that currently T-bills have a market event, because suddenly you can make yields on, you know, US Treasury bills again, which was basically non-existent for a decade plus, right? It was like irrelevant and so on. And so what we're seeing now is that with the Treasuries product, which we launched earlier this year, is that you see a lot of adoption there, because suddenly it's a little bit of a flight to safety, right? So people are looking for kind of like more guaranteed yield and things that are less speculative, and so on. And so that's really what we've kind of seen. So we often talk about this concept of like people move from like meme stocks to T-bills, like the two sides of the extreme.
But that's a new on-ramp for people.
Exactly, 100%. 100%. Yeah. And I think there's a lot of, we also recognize that each of these moments when the markets change is a forcing function for people to educate themselves about something new. And that can be a new asset class, that can be, you know, why markets are moving to a certain extent, and so on. And so right now there's a lot of re-education happening around just fixed income, you know, starting with things like T-bills.
Right. So. Yeah, let's talk about education for a minute, because I think for any company at any stage, a content strategy, right, is just central to it. And again, that's something that you guys started from the very beginning, was how do you democratize investing? A lot of it is, of course, the community, but it was just education, like very transparent, very simple, you know, 101 terms, you know, so people felt comfortable and felt educated every time they were in the public app. let's talk more about how you guys have ramped content, right? Let's talk about the town halls. There's so much in the public experience that you can't find anywhere else. It's very unique content. It's a different spin. Like there's obviously a ton of financial content in the world. It's one of the biggest categories, but the take you guys take is very different, and how approachable it is. And the amount you guys are giving back to that community. So why don't you share more about the content strategy and town hall and the recent events you guys are doing?
Yeah. So in our business, usually most investing platforms, so to say, have been places where you go to execute trades or track your portfolio. And what we've basically always said is that public is not just a place where you go to place a trade. Public is your window to the markets. And so, the more people actively participate in the markets, and the more we get closer to everyone here having an investing app on the home screen, the more also all the different things around the markets have to adapt to that reality. And you could argue that things like CNBC is not necessarily like a real mainstream, markets news channel, maybe for the people in the room here, but for most people in Middle America, it might not be.
Right.
And then on the other end, you have your extreme of, the TikToker or so on, who's doing some financial content. But there's a lot of space in between of that. and that's a little bit what we saw also our role to ensure that we always give people context around the markets. By that, creating this habit of if you want to know what's going on in the markets, you will open the public app. And then experiment with different form factors and stuff, right? So we have Public Live, which is, you can call a clubhouse style audio show, but where we host it, we have our own hosts. We have a show in the morning at 9:15, it's called The Open. We have a show at 4 p.m., it's called The Close, for obvious reasons. And so having a lot of context around the markets to basically, make sure that we can be that window for them, so to say. And then from there, it goes into other formats, right? And so we break it down to these three categories. It's either user-generated, which is the social piece. It is programmatic, which is basically data-driven. And so that can be a lot of data in the app around certain assets and companies and so on. And then it's editorial, which is things that we curate or, facilitate, which is then, public life and things like town halls where public company CEOs, do Q&As around their companies to retail investors and things like that.
Well, and then companies are looking for that connection to retail investors too, right? They're looking to have that one-to-one. They're looking to get closer to the end decision maker. And for everyone in the room who's probably thinking, well, maybe easy for Leif to say he has an army of people to do content and production. He doesn't. How many people work on your content strategy?
Internally, 4, including
right. I mean, it's been so efficient.
Data person and so on.
Yeah.
So it's super, our content team is super lean.
Right.
And so, huge respect for anyone on that.
Right. But you can get there, you can build something pretty robust with a clear perspective on what you're trying to do, knowing the voice, right, of your brand and what you're trying to offer, and then strategically finding content to fill that. You don't need an army of people to execute, even at the scale that you guys are executing at.
And form factor matters a lot, right? So if you want to do a bunch of video, you're gonna need more people, you're gonna need potentially some studio and whatnot and so on. Audio is a form factor that someone can do from pretty much wherever they are, right? Text is another form factor that doesn't need necessarily a studio and things like that. So I think form factor makes a big difference.
Right.
In terms of how much leverage you get out of your team for the creation. But yeah.
Let's talk about design for a minute, because I think this is something too that Leif has brought to public and was a founding principle, was just the design and the aesthetic and how it felt, and I think how that led to the emotional alignment, the value alignment with users. But talk more about how you guys approach design.
I think there's 2 aspects, right? So there's design around the brand and there's design on the product. And on product, we always talk about UX over UI. And so it has to work before it has to look good. Because so often you can fall into this mode where it looks really nice and you get the designer's it's so beautiful and whatnot, and then you put it in front of a user and they have no clue what's going on. And it looks great on Dribbble, but nowhere else. And so I think UX over UI is one we talk a lot about, and so I think that's on the product design side. And I think on the brand design side, we've chose very early to build a proper creative team in-house, to make everything internally, and to, stupidly said, be okay with spending the money and the resources to create something that just always looks and feels incredibly high class. You'll be the judge, but, you know. And so very early on, we just made sure that we're just, you know, having a like a proper internal team to just really, you know, nerd out about it, so to say.
Well, and the infrastructure to support it, like just a very seamless, fast, like consistent experience. You always know you're in a public experience when you're in the app or in a town hall or any sort of content. I guess 2 last questions. If you were to, you know, where are you guys? You said you're kind of actively thinking through product roadmap now. Kind of what's next? What does the next kind of 18 months, you know, look like for Public? Ingesting all the changes in the market, managing a big and growing fan base. How are you guys thinking about navigating this year into next year?
What was interesting for us is that the first 2 years when we were in market, it was just all user growth, right? It was user growth, right? You had the COVID moment, you had the GameStop moment. It was very like top of funnel.
Yeah.
You know, it was a lot about refactoring the trading system 3 times. Trading systems are incredibly hard and complex to build. And so it was a lot about that, right? Then 2022 was really the first year for us to really focus on even things like monetization, right? And so, you know, ARPU has 10x in that time frame, you know, gross margins have 10x in that time frame.
Yeah.
Right, we're a company that has...
While keeping retention high, engagement high.
Exactly,
yeah.
right? And so we're not a company that has 80% gross margins, which is awesome. And so a lot of work on that kind of stuff. And then, and that just always comes also with just, obviously, you know, launching of new asset classes, of new, you know, high margin products and so on. And so that's just going to continue throughout this year. We do believe that this year is going to be the year of fixed income, and that what you're seeing with T-bills right now, like that re-education, that's going to happen in other fixed income products. And so we're definitely exploring a bunch of stuff there.
Yeah. Well, we'll see what the next year holds. If it might still be fixed income this time next year. We'll see what happens. It is. It's very exciting. Yeah. It's good to see your money grow without, you know, a significant amount of stress and applied pressure. I guess the last question would be, especially since our audience is largely current founders and or people planning something new, or their second or third time starting something new. You've been at this for a while. You've been a homegrown entrepreneur for years, even before Public. Love to share kind of, you know, the most important lessons or advice you would have for this group.
Man, it's a broad one, but...
we need a new session, but we have a few seconds left.
Yeah, I think the first, like one of the main things is just like make stuff, build stuff. If there's one thing that I'm incredibly proud of in the Public culture, is that it's a super high velocity culture.
Get it
like we just, like the amount of work that we're shipping with the size of the team we are, I personally find incredible. And so I think, you know, you're like just obsessing about the work and obsessing about the shipping velocity, I think is one of the core pillars. And, you know, to give an example, I talked about it earlier, but like we, for example, have this thing where we basically, you know, close to never really hire from big tech. And one of the reasons is because there's too much process, there's too much overthinking, there's too much, you know, trying to be too much of an intellectual, intellectual about everything, you know, and so on. And just like there's nothing as powerful as just making stuff, getting it out there, you know, seeing what people react to it, and you know, iterate on that. And for that, it's really like, you know, have as little process as possible, right? Processes that serve you, you know, there to serve the process. And so, you know, like if someone like as soon as someone says like, let's bring in a Scrum Master, you'll be like, like no. And so I think that's just like focusing on that velocity and just like making sure that your culture is just so heavily built around obsessing about the work, I think is the most important thing, right? As soon as you have a bunch of managers who are just obsessing about their management culture and whatnot, like, oh, you know? And so one of our management principles in the company is every manager at Public is also an IC. And I think that is super, super important, right? You have to have love and obsession on the craft, and everyone in the company needs to have that, and your CFO needs to be able to go deep down into the spreadsheets, and you know, your head of product needs to be able to go deep down into the deepest Jira ticket and wireframe and whatnot. And the second you lose that ability in your team, and where you have managers on the team who, can't really hold their own in Figma anymore or something, I think it's dangerous. And we had some of that happen in the past as well, and I think we've learned from it.
Yeah.
So.
Well, and empowering your team to go do the work too. So, great.
Cool.
Thank you. Thanks everyone for listening.